morning, esteemed listeners and investors. We want to welcome you to another Monday morning breakfast session. I am Akinyemi Omotayo. Now, I'll be taking you through the happenings around the fixed income market for last week and our outlook for the week. Looking at the money market and treasury bills, we see system liquidity close on a positive region for the second consecutive week, as we see funding rates declined to 19.25% and 19.68% respectively for the open repo rate and overnight. For the treasury bill secondary market, closed on a bearish note following the primary market results, where rates went up and we witnessed yields advance marginally by an average of 4 basis points week on week to 24.22%. At the end of the NTB auction, the CBN will offer 513.43 billion worth of NTBs. Looking at the result of the last primary market option, we observed that stop rates remained flat on both 91 days and 182 days, and for the 1 year rates from 19.864% to 20.65%. For the bond markets, we see the federal government bond secondary market traded on a mixed note, with supply seen at the short end while demand denominated the mid to long end of the yield curve. On a tenor basis, yields across the short end of the curve advised by 56 basis points week on week, while the mid to long end declined by 10 basis points. Maturities that were actually traded over the week are the 2025, 2027, 2028, 2038, 2049, and 2053. On an average, yields across the benchmarks advanced by 18 basis points, closing the week at 19.49%. For the foreign exchange market, the Naira has continued to witness depreciation. As we can see, the NAFEM rate closed at 1,666 Naira 72 kobo on the 1st of November, and as compared with 1,600 as at 25th of October 2024. This is a call on our government to provide a lasting solution to address the continued depreciation of the Naira. Our outlook for the week, we can see funding rates are expected barring any significant inflow. And for the federal government secondary, bond market secondary, and the treasury bill secondary market are expected to trade in line with system liquidity. That being said, we are looking at products. We implore you, our investors, to subscribe to our numerous array of products from our lead fixed income fund, which has a low risk profile. The dividends of this fund are paid biannually. It has a minimum holding period of 90 days. For our lead balance fund, this is for our customers and clients and potential investors that have a flair for equities. You can balance out your fixed income with our lead balance fund. This has a medium risk profile. Dividends are paid annually, and minimum holding period for this fund is 90 days. For our investors that have a flair for fixed deposits, we implore you to subscribe to our lead Gazelle portfolio with tenors ranging from 90 days to 365 days, and competitive rates that we assure you your banks cannot offer. For our clients that want to hedge against the depreciating Naira, we implore you to subscribe to our lead dollar fund. The risk on this profile is low. Dividends are paid biannually, and the minimum holding period for this fund is 180 days. For our investors that have a higher volume, you can choose to invest in our Eurobond trading platform. The minimum investment threshold for this is $200,000. The risk profile is minimal, and it gives our investors access to sub-Saharan bonds and corporate bonds like the Angola, Nigeria, Fidelity, EcoBank, and more. That being said, let me hand you over to our in-house trader, Mr. Taufik Akolade, give you an insight on the happenings in the equity space and what to look for this week. Mr. Akolade, over to you.
Okay, thank you, Mr. Omotayo, for the good insight into the fixed income. It's time for the equities market. Of course, we have a lot to cover, so we'll try as much as possible to make use of our time. So we won't be able to actually dwell more on the activities around the volume and value. But the only thing we observed and witnessed in the course of last week was that for the entire 5 trading day, Monday to Friday, the BS took over the equities market duly because we saw some tickers, profit taking some tickers from Monday, especially the highly capitalized stock, the likes of MTN, the likes of Boa Cement, and a few other highly capitalized stocks, despite the fact that we also saw renewed buy interest as a result of some of the corporate results that came into the market in the middle of the week. But the heavyweight in the markets, the profit taking those heavyweight in the markets, still overshadowed, still cornered the activities around those other banking stock, the like of GTB and Zenith Bank. So for entire last week, markets lost for those 5 days. And then in terms of ESI depreciation, it lost 203 basis points, 203 basis points, closing the ESI at a 97,433.02%. So as at the end of last week, our year-to-date performance is stood at 30.30%. But having said that, we have also seen that around sectoral performance under our coverage, only 2 out of those 5 coverage were also recorded gains. NGS Banking and NGS Oil and Gas recorded positive because we have seen strong buy interest around those sectors under those indices because of the performance we have seen across those 2 sectors, the banking and the oil and gas. So looking at our projected scorecard, from time to time, we'll continue to display this projected scorecard for bank recapitalization because we have seen results coming to the market. If you look at our analysis on the projected capital base of these companies, by the time they are also raising capital, what will be the position of their EPS, their profit after tax, their earnings per share, the P ratio, return on asset, return on equity, because these are the key metrics you can use as an investor to take a decision in the market, either to buy, to sell, or to hold. And we have seen that the GTB, the Zenith Bank, and the Sterling Bank, and the First Bank, we have seen their result in the market for the Q3. They met market expectation, and we are happy that despite the fact that we have also factored those outstanding shares that are going to issue. So what we have in this slide is taking care of diluted earnings per share. So when you look at their Q3 results in 2024, the EPS and then the PE ratio and then the price to book ratio may be lower than what we have here because the current 9-month results of some of those banks has not actually taken into account of the capital they have also raised, especially for those 5 banks. But we have gone ahead to ensure that we work on the diluted earnings per share, factoring those amounts they are also raising in the market. But looking at those metrics, the performance across board is still very encouraging for the banks. You see that some of these banks, the earnings per share, each of these bank earnings per share is mostly moving close to the industry average. For the banking industry, if you look at the earnings per share for the industry average, is a 14.42, P ratio is 3.36, and then P price to book ratio is 0.77%. By the time you also look at the performance of some of these banks, the UBA, you see them having EPX of a 20.49, 20 naira, 14 kobo as a Q3, GTB 37 naira 64 kobo, and then Zenith Bank 28 naira, and then First Bank 15 naira, Access Bank 14 naira 45 kobo. If you also look at their price to book ratio, the standard price to book ratio in the industry should be around 1. But if you have something more than 1 sometimes, you cannot actually discard that stock is undervalued because some other times you have to look at non-operational factors and the buy interest and key activities that is really likely to drive activities around those tickers. So if you look at all these banks that have formed our recommendation, the reason why we are emphasizing more of this is that from time to time you will be seeing some of these tickers in our recommendation because we are tracking them. We are looking at performance based on what they are doing. That is why we will continue to be bold enough to advise you that you can take a shot in some of these companies. So all these banks we have in the scorecard, what we have there is diluted earnings per share for the 2024. That has taken into the account of the capital they are also raising. So they are good to go to buy. And because of time, let's also take through some of the results that I've also seen in the market for Q3 of 2024. This is just the summary of the results. But look at the Access Bank. Let's just go to the basic earnings per share, which is going to talk whether they are operating at a profit or at a loss. For Access Bank, we could see that as at Q3 of 2024, their earnings per share is now at 12 naira 40 kobo, while for the Sterling Bank, it's also 95 kobo from 57 kobo they did last year. Zenith Bank has also moved from 13 naira 82 kobo from the last year third quarter performance to 26 naira 34 kobo. And the same thing Wema Bank. has also moved from 199 kobo to 3 naira 20 kobo. It's an indication that the banking industry will still continue to give better and compensate investors more, as long as they are looking at those important variables to take a decision. It's just for the banks. Let's also look at other industry, other sectors, so that it will not look as if you're only talking about the bank. And look at the total. For a very long time, Total Energy, Corn Oil, and the Aradid, they've also formed part of our recommendation. We only place hold on O&Do because we are expecting them to release their results, but that also came to the market. But let's just go through the Total. Total is not raising any capital. So whatever thing you have, that is the true position of their earnings per share, whether it's diluted or it's not diluted. The earnings per share of Total as at Q3 of 2024 stood at 80 naira, 77 kobo from 31 naira they did last year. Let's also look at the corn oil. Corn oil has also moved from 12 naira 52 kobo to 16 naira 33 kobo. And then also look at Arade. The result we have for Arade has taken into the account of 4.3 billion units of shares newly issued, because when you look factor that, what we have in Arade result is diluted earnings per share. That has taken into the account of the newly issued shares of 4.3 billion. And as at Q3, their earnings per share stood at 25 naira 45 kobo against 4 naira 41 kobo last year, almost 407.10%. Of course, we've seen a lot of profit taking around the Arade. But what is important is that we'll continue to guide our decision taking, our recommendation based on some of those key metrics. We are not looking at the market sentiment. I'm sure in the medium long term, this company is going to, you see a turnaround in this company. That is why the price you are seeing in Narada today is currently an undervalued price. Over time, you may know that opportunity. If you check the recommendation in the oil and gas, we have also factored that, and we're also recommending for O&O, we'll continue to still place it on hold. The 2023 financial is not sufficient enough to take a decision, because if you are taking the decision in any company either to buy or to sell using those key metrics, it is important you work around something we call trailing 12 months earnings per share. You must be able to see their result in the last 12 years. Even if you cannot see the last 12 years, let's see the recent 6 months or the recent 12 months. Just like as a total Conway, they have also showcased their performance. And for the O&O, for now, we are still not placing it on buy. We'll still continue to watch the environment and see if we can get other information. So for now, it's not part of our recommendation. But the good things about the company is that the company has now moved out of the loss. They are now in the profit region. As at Q2, as at the full year of 2022 financials, they were at a loss of 81.2 billion. But their 2023 annual results shows that they have been able to grow, move from the loss position to the profit position of 60.2 billion. So currently, the earnings per share has also moved from 2022 negative of 6 naira to positive of 5 naira. That's also very encouraging, and that is also good. But we will also see if we can have information about the recent earnings per share and recent performance in some of these companies. Because the 2023 is not sufficient enough. We've seen a lot of activities in 2024. So companies have released their Q1, Q2, and the 9 months. So, but we'll continue to advise our investors that the good news about this company is also coming into the profit region. And then the activities around the oil and gas industry is also favoring those companies operating in that sector. We've also noticed that there have been tension in the geopolitical region, Iraq and then the Israel, and that has also distorted served as disruption to the oil price. And some of these companies, they're all operating in the upstream sector of the oil and gas. So as the price of the oil continues to go up in the international market, their revenue will continue to grow, and that will also improve on their profits after tax, and then you also improve their earnings per share. That is why all the results across oil and gas sectors have been very, very good. They are also doing very well because the environment is still very friendly, and they're also making money. For the oil and gas, you see some of those stickers. So we can also see that Agric is not also cannot be excluded. Presco Okomu has been top post of our recommendation over time because of the industry they operate. Look at Presco, their Q3 earnings per share from 2023 naira 47 kobo to 51 naira 77 kobo 120.56 improvement. Also look at Okomo. Okomo has been able to also move from a 22 naira in 2023 Q3 to 30 naira, 35.48. That's also an improvement. They've also declared an interim dividends of 2 naira. That will be the second time they'll be declaring interim dividends. They did 8 naira. They also did another 2 naira. It's an indication that the final year result is going to be more of a bumper harvest for those investors in this company. For the GTB, we've seen rally around GTB on Friday. It has moved to almost 55 naira. And if you look at our projected capital in terms of the upside potential, we move it to around 59 naira because the valuation around GTB is still hovering around that price. So investors, valued investor, will continue to reprice assets that has been able to come out with good performance. That is what is happening in GTB and in Zenith Bank as well. And First Bank, they are also raising their capital. So because our cross-board has not been so bad, the market is happy about it, and the met market expectation. Look at custodial investment. It's not in the banking. This is also conglomerate vis-a-vis the insurance. Their basic earnings per share has also gone from 19.7 kobo to 7.5. It's also very encouraging. So we're also encouraging to 75 kobo from 19 kobo to 75 kobo, 280.71%. So if you are not looking at banking, that you don't have passion for banking, you don't have passion for agri, you can take a shot in the insurance or in the conglomerate. UAC, we've also seen UAC moving their performance. Look at their revenue, 81.5 billion to 133 billion. And the profit for the period has also moved from 6.7 billion to 13 billion. As at Q3 of 2024, they are currently having a basic earnings per share of 4.26 naira, despite the fact that the companies or takers operating in that segment of the market, they are facing really macroeconomic headwinds because of foreign exchange. But this company, they have been able to re-strategize and increase on their top line and their bottom line. So UAC, you see them in our recommendation. So because of time, NIM Insurance as well, they've been able to grow their revenue by 117.92%. So because across board that it's the market last week, they've been very encouraging. It's an indication that equities market is looking more stable. Companies are now bringing out the strategy to ensure that those headwinds are being navigated, and then they are able to deliver a good return to investment, to valued investor. So I think last week we talked about some of these companies. Stanbic IBTC, we did the analysis on that. UBA, UPDC, Dangote Cement, CAPL under Industrial, Airtel Africa. But all these 6 companies under this slide, if you look at them, none of them is operating at a loss. Even UPDC that was formerly operating at a loss, they've been able to move from a negative of 105 million naira to 407 million as at Q3 of 2024. So it's an indication that there's more of a stability in the equities market, because what drives equities market, what serve as catalysts and drivers of the equities market is the company performance. If the results are showing right, you'll see a lot of people cashing out and then taking profit and moving their investment to elsewhere. We are not saying that you should not also consider other products. Capital also have other products in the fixed income, in the money market. So if you want to balance the portfolio, make a combination of the equities market vis-a-vis the fixed income market, and then you can go and sleep, because with that, you have been able to immune your portfolio against any fluctuation either in the local market or in the global trade. Because of time, our recommendation has been sent out this morning, and then if you look at it, all our recommendation 1 to 25, there are companies we have talked about in the previous slide. Because of their performance, we've seen their return on asset, return on equity, the P ratio and price to book ratio. 1 to 25, they are good for buy. 26 to 30, we're also placing those companies on hold. While 30 Cadbury, we're also encouraging people that for now, you can take a short, you can sell Cadbury PLC. Expectation and projection for the week. Last week, we saw Transcorp released into the market because they have also done something we call share reconstruction. in terms of they reduce the outstanding share of 40.6 billion to 10.15 billion, where you see your holdings reducing in the Transcorp PLC, but the value does not reduce. So if you see a name price of 46 or 47 naira, that price is representing 4 units. So last week they have been able to reduce the outstanding shares, and the beauty of company sometime during reconstruction is to ensure that investors are also very compensated, because when you reduce the outstanding shares, the earnings per share of that company is also going to increase over time, and it's going to add value to that company. So the value of the investors and their wealth in the Transcorp has not changed. What has changed is just the units. So if you see a reduction in your portfolio in terms of Transcorp, your value still remain the same. There's no cause for alarm. You still maintain your position. And we have also seen the result of Transcorp. They are also moving gradually in expanding their operation in the area of oil and gas. So the price of Transcorp, we are seeing that over time, when you see they are able to improve activities around oil and gas, we may not see this price in the medium long term. So market witnessed the number of corporate results, which we talked about in those previous slides, and they make market expectation. The oil and gas and the banking did fantastically well from the results we have seen so far. So we expect buy interest around tickers with the impressive Q3 performance. Those results came out into the market towards Wednesday and Thursday. So I'm sure analysts and various investors and valued investors will have sat down and analyzed, and people will want to see opportunity where they can also improve or also increase their holdings. So that is going to impact in the market this week. Oando also released their 2023 financials. We have said it is not sufficient, but we'll continue to monitor other results that is likely to come out. Let's see their first quarter for 2024 and then second quarter. That will showcase what they have been able to do in 2024. But for us in Lead Capital PLC, the 2023 financial is not sufficient enough for us to give our judgment and recommendation. But we also applaud the management of the company that at least they've been able to move from the negative to the positive. That's also a good news to the market. We expect buy interest around tickers in impressive Q3 performance to drive the activities leading to uptick in the ASI this week. Last week was the bears took over the market, and then the bull disappeared in the market for the entire last week. But we are expecting bull to come back to the market this week and display the bears towards the end of the week. We expect ASI moving slightly toward the green zone and end the equities market on a positive note. It may be slightly, but the good thing is that we are still going to close the market on a positive note. So we have come to the end of the section. I think it's time for the question and answer. The floor is open. Either you are sending the question to the Q&A box, or you want to talk. We are going to unmute you to allow you to talk. Thank you. The floor is open. It's time for Q&A in our fixed income and then in our equities market review.
Okay. Good morning, all.
Morning, Mr. Latif. Please go ahead.
Okay, so my name is Latif, all right? So my question is simple. I mean, for a while ago, you mentioned the adjustment to Transcorp shareholding, right? And that's very clear. But what I don't understand is over a week where we have that adjustment on the lead platform trader app, on your app, that adjustment is yet to be reflected. So what is showing is there is so misleading, as if we still have the old unit of shares as at the new pricing. So how soon can we have this adjustment on the same platform?
Okay, sir. Thank you, sir. So what we in now, as soon as they did the reconstruction, because you have numerous investors that also have Transcorp. So there's something we call in-house reconciliation from our own end. We've started reconciling client account to reflect the true position based on the sale reconstruction. So as at last week, it was last week. I think it was towards the middle of the trading day that we got the information, and the Transcorp has been released. But for all our clients who have stake or position in the Transcorp before the end of the week, you see your position reflecting the true reconstruction units on the lead trader. So we apologize for that, but we've started doing that reconciliation to reflect the true position, but your value has not changed. Thank you. Okay, somebody is asking a question.
Sorry, sir. All right. So what if today I need to sell my holdings on Transcorp, all right? So what do I do? Because I mean, last I wanted to last week, but what I have there is misleading. So I just want to stress that how soon do I have it adjusted so that I can do my trading? That's just my concern.
Hello, sir. I saw what is going to happen, because I said we are going to do the reconciliation. If you want to sell your holding on the platform, whatever units you have, you divide it by 4. If you have 10,000, you cannot place the 10,000. What is going to be available in your CSS position is 2,500. But before the end of the week, the 2 position with the reconstruction will reflect in your late rate. If you have 10,000 and you want to sell the entire 10,000, you can't key in 10,000, key in 2,500. If you want to sell, if you have 20,000, you want to sell the entire 20,000, divide that in by 4, and that will give you what you're going to sell. You have to sell 5,000. Your account officer will also reach out to you. Okay, somebody said, can we get analysis of EPS of core banking operation, excluding FS gain? This will help us better. Well, if you check what is more important, whether FS gain or not FS gain. The way we usually do analysis, we consider various sources of income for the companies. FS gain is also part of the means through which bank can make money because of the industry they are also operating. Some companies are facing problem of foreign exchange losses, while some are also gaining. But we also look at the way the bank are structured now. Bank cannot only depend on the core banking operation. That is why most of the banks are also moving towards having a holdco structure, so they can also have areas of income in the asset management, in the pension. But what is very most important is to look at the composition of the balance sheet. For some of those banks, the asset they are also holding, they have not actually sold those assets. So they'll continue to recognize the FS gain. But if you look at what they're also making from the core banking operation, it's still not bad when you compare it to what they've been making in the previous year or in the years. Thank you. Okay, what is the recommendation for Transcorp PLC? Many thanks. If you check our weekly recommendation, it's also Transcorp is under conglomerate. I think we recommended Transcorp for buy. Okay, somebody is asking, what is the update on adoption of UCAP bonus? Well, I think the last time I talked about it, it has not been credited. So because it has process and procedure, I think as long as they are still waiting for approval, as soon as they get approval from the regulator, which is SEC, within short time they will do the crediting. But I'm sure before declaration of the final year result for 2024, they will have done that, because whatever thing they are reporting in their earnings per share or profit after tax for 2024 must factor in those bonus. So it must be diluted earnings per share. So there's no cause for alarm. I'm sure those who are benefited from the bonus, even if it has not been credited, you also get dividends on those bonuses when they declare final year dividends for 2024 financials. Somebody said, how far can RIT go down? Well, we may not have that information. What is going to determine is that the market, some people will continue to sell, while some people also continue to buy. So how far it's going to go, we may not see. But the current price RIT is trading, we believe, is a good entry point, because I've been able to give us some information or insight about their performance as at Q3 of 2024. Their earnings per share has gone to 25 naira. If you look at the industry average in the oil and gas, I'm not sure they are doing bad. So these are the things you also need to consider. The price is trading is a good entry point. You can go in. Well, in terms of the upside potential, we emphasize and forecast that it might get to around 700 in the medium long term. So if you are still having ARADE where you may not sell, you can hold it at least for medium long term position with what we have seen in terms of their earnings per share. Okay, please, I see the recommendation for ARADE. Why is the price going down? People are taking profit in ARADE. Okay, let me just explain better on this. If you look at ARADE, that company was formerly listed on NESD, and then at the point in time it was trading around 10,000. But the management decided to release the company on the NGS, and then they diluted the shares by creating additional shares. So anybody before they released it on the NGS, if you're having 1 unit, That 1 unit, it will now become 20 units. That created a lot of outstanding shares. So those who have position in Arade, because of the dilutions of the outstanding shares of that company, they are the ones selling. So sometimes investors' activities used to punish some metrics. That's what is happening to the RRA. But we have seen their result. The result we have seen, earnings per share is diluted earnings per share, and they are still at 25 naira. I think it's a good buy with 445 naira. So there's no cause for alarm. The company, they are into refinery, they are into so many things. And then the result they presented to the management of the exchange when we visited them for the listing by introduction, we are satisfied with the presentation of their management. So that's why we are also placing it on buy. Custodian, if you check our recommendation, is buy. We've seen their Q3 result. They've been able to grow from 19 kobo to over 7.50 kobo. Okay, we have come to the end of the section. So we'd like to thank all our valued investors. It is an honor for us to have you joining this morning section on our platform. We appreciate you for all your time. The recorded video of this presentation will be forwarded to all those who join and those who register for this program this morning before the close of the business. Once again, we want to thank you for your time, and then we wish you a very successful and good week ahead. Thank you. Do have a good week.